What's going on, all? It is Tuesday the 8th. Tomorrow morning, I'm back on the road again. I'm here I was gone for an entire week, had hit a couple different places. Now I'm back 2 days back at home. Not a real long time, right? 3 nights, got back Sunday. So now I'm going to leave tomorrow. I'm going to be in Miami. So I'm going to share with you where it is I am going. So we're going to be hitting the End of Slavery tour here. You've got Tim Ballard, you got UNB Park. We're going to be March 10th in Florida, and I'm not sure exactly what my role is going to be out there. They've asked me to participate, so I'm going to see how this thing ends up. But it's something that you, of course, all know where I stand on this, and that I'm going to put what I can into getting the knowledge out there about what's happening in our world, that we are spreading ourselves, we are moving ourselves away from the foundation of where we started as a nation, right? And as a result of that, part of the symptoms of the real sicknesses here is what we're seeing with the human trafficking and all that. So that's going to be conversed out there. There's more cities that are announcing that. Go to the website, scroll to the bottom, you can see the different cities we're going to be in. If you're in Miami, go check it out. Text me, let me know you're there. Love to be able to see if I can catch you. Don't know exactly how it's going to work out. I'm just going on faith on what's going to go. That's going to work out very, very well because of the cause that we're after. So that's what's happening tomorrow. I'll probably be giving you guys I'll give you a rundown on things, kind of a recap, if you will, on Friday morning as to how all that went. So let's get into what's happening in the market. Madness today, continued volatility, just like what we were talking about last week when I showed you the charts and how there was some irrational volatility. It still continues, right? Now we're back to the bottom here. Let me see if I can zoom this a little bit better so you guys can see what's happening with all this volatility. You see, like I was showing before, when I was using my cell phone, right? You see the normal pattern, how it's pretty tight, and how this is just erratic. Look at this constant massive movement. We get our way up here, things are moving, improving. We're thinking we're going to get somewhere, and all of a sudden some people saying some things are fairly negative when it comes to the Fed, and all of a sudden, look what, this Jerome Powell talking, killed it, right? Try to crawl back from it, some more things killing it. We've got stock market getting just pounded, right? Which it's kind of due, right? Everybody's thinking it's been due. Everybody's been worried where the stock market's going to go. This has been due. Now, if something's going to completely take the legs out from underneath it, I don't know, right? This is something that I'm not 100% understanding myself, all the details of it. There's a lot of guesswork going on. You also have looming recession, if you will. You've got the treasuries, the yield curve, which is now really, really tightening up. And let me show you that. Another chart that I have looked at over the years. Again, lots of data I'm throwing at you. The 10-year Massachusetts. So basically meaning if you're putting your money into a 10-year instrument, you should make more money because you're allowing your money to be put out there for a longer period of time. If you're putting in for a short window of time, you should be making less, right? Well, right now, the 10-year and the 2-year, the curve between them two, meaning the yield that you would get between the two of them is now getting to the point where here's where they're at. You're literally at a point where they're going to be almost at zero, meaning they're going to be creating the same amount of return for whether you invest in a 10-year instrument or a 2-year instrument. We've seen in history where it's gone the opposite direction, where you made more money on the 2-year, right? This goes back then to the 80s, right? You see it again here, again in the late 80s, see it in the early 2000s. You see it right around right before the big Great Recession, if you will. Then you can look, these are the recessions that followed every time that happened, right? We had a little bit here, we had a little bit of a recession followed there into March in 2020. We got what potentially could be another recession coming. So the signal of recession that's going to come always worries people. What's going to happen with real estate, right? Because most of us, our memory of recession was 2008. Well, let's take a look at this chart here. Well, that memory of 2008, yes, you're going to see right here the 2008 recession and what happened to home values, right? Or home prices, not so much values, just values based on a person's willing to pay for it. Major beating. But what led to this, right? What led to this massive increase in home prices to begin with was irrational lending, right? Lending to people that really shouldn't have been borrowing that money anyway. So they didn't have the capability to really repay it. And as a result of that, we didn't just have a recession, we had a global I wouldn't say basically a collapse, right? We had everything get impacted because of that improper business. Now, we've come back because a lot of people will be able to get out there and buy houses. Right now, there's a massive shortage. We've got a huge demand for it. That's what's driving prices now. We're going to see another recession. But look, these are all recessions in these dark spots. Every time we've seen housing stay either fairly flat or going up in value during the recessions, only one time do we see that it did not. Here's another one. It was a little one. And that, I think, had a lot more to do with the pandemic than anything. But still was a recessive time in our economy. As a result of that, property values still went up, right? Property values continue to go up. Only in one time in history that we've seen recessions since the 1960s did property values not go up. So think about that. With all the things that are stacking up in favor of real estate, it's still a safe place to put it. Inflation's getting crazier, guys. Look what's happening with now Russia and the oil thing. They're going to be out, banning Russian oil, which is now going to push prices up even higher. I mean, they're already going, barrels are going over $100, probably $120 now. I hadn't looked. It could be heading to all-time high, pushing high 100s, maybe even $200 a barrel. I don't know. That being the case, inflation's out of hand. With that being out of hand, interest rates continue to follow a continued increase, as we saw with the volatility of those charts. It's going to go up, guys. We're over 5% now. Just get used to that. Quit putting yourself through some sort of hell trying to find something cheaper. Let's go out there and continue to know that because of inflation, you're not even paying that dollar anyway, right? You've got my app. If you don't have my app, better email me and we'll talk about the app and get you set up. But know that you're the person that's going to take advantage of the situation because you understand where real value is, not the common person that's going to be thinking that they just lost out. Now, why invest? Go out there and get the deals that somebody else is not willing to do because the market is going to still bend to you in a way, right? Still going to be able to generate the wealth that you're looking for. It just might take a little bit longer, right? A couple more years, big damn deal, right? While the other person's doing nothing, you're going to be building your future. I'll get back with you on Friday, give you a rundown on how the tour was, and hopefully I got some awesome things to report. We'll talk to you again then.